problem. I've had problems in the studio today. One of the big jumbo light. That's why I think I have such a nice glow today. I almost look like Orange Man.
I think it's because you're wearing a Emmanuel Macron faggot hat.
Slow down, Matt. The Irish, everybody wears them. And it's a manja.tv. Listen, if you need some killer spice, go to manja.tv.
I thought it said Macron.
I know you said Macron. I'm saying manja. I'm Orange Man today. So bad. Everything I say is bad. Fade everything I say. Orange Man bad.
Were you in the
Forget about it. I got to tell you, I had trouble with the studio this morning.
I hear you.
And I had a light go out.
Well, when the studio is also your tanning bed, it gets a little tricky.
That's a good idea, right? Trade from the tanning bed. I'm not opposed to that. Hold on, I got to retweet. Hey, listen, this is Market Vitals, marketvitals.io. It's not .com, not .org, not .eu, RUCA, info. It's .io. IO, it's markets we talk, Please retweet and share the podcast. You don't need to like anything.
But it is not good for the hog herd.
Whoa, I'm getting a serious backup. Oh, you know what I got going, I think?
What?
I think I got another broadcast playing. Hold on. I got echo in the chamber. All right, man, let's get to it. Matt, there seems to be some debate going on about the usefulness of masks in particular.
Uh-huh.
And I got to tell you, from the beginning of this whole shit show of COVID-19, I'm not opposed to mask wearing in particular in confined spaces with a lot of people. There is some science around it, but let's be fair that the science isn't rock solid. Like, I wouldn't bet my life on it that it was going to protect me. And it goes back to this continuing thing about the science, because it's always changing, and it just keeps coming back at me when I see tweets like this. Scientists have discovered a mind-boggling new type of hurricane that exists in the upper region of the Earth's atmosphere. By the way, SpaceX, I'm sure, needs to take this metric into consideration when they launch their next SpaceX mission. Like, oh shit, we didn't see the outer atmosphere hurricane that we just sent you all into. Sorry about that. It's where the planet's skies meet outer space. It's a space hurricane. I wish David Bowie were alive so he could write a tune called Space Hurricane, because if anybody could have done it, it would have been him.
Would have been the Starman, absolutely.
Right? Yes. Anyway, I had to bring that out because it's now 16 states fully saying, well, slow down on the mask mandate everywhere. And still here in the Pacific Northwest, where everyone is super obedient, still about 80% outdoor on the walking trails.
I don't know. I saw that on the local news last night. I'm like, I think that's just more PR. That's like reverse psychology bullshit again,
All right, Matt, we had a reach out from inside the marketvitals.io network that maybe we could spend a little time about being ice cold, Matt.
Sure.
In your trading endeavors, and I have a few cerebral thoughts on being ice cold. But why don't you start with what some things that you might do if you're not exactly seeing the ball right?
The first thing is, for me, you got to get up and bat again. So I'm not one of those that necessarily goes dormant after a drawdown. Drawdowns to me typically lead to some of the, when I have drawdowns, the next move is a significant overcoming of that. So I encourage drawdowns because it usually brings the profits that overtake the small losses that I took because of having a game plan. So I think that's the biggest thing is you better have a game plan and you better adapt to the market conditions for that game plan. And if the game plan doesn't work, and again, this takes time. I think it takes a multitude of years, really. I mean, I believe that if you can trade successfully for the first year or two, and that means break even trading, you've done pretty well, especially if you're trading with a small account. It's good practice. And I think that's the only way for somebody to get used to what you're talking about, is that feeling in the gut that, oh shit, I mean, today's a good example. I came in hoping that we'd see a sell off, and we gapped up to the right off the get go. I was not short. I was hoping to see a sell off to test the overnight lows, and we didn't see it right away. We actually ran some stops, obviously, for those that got short again overnight, because we had been much lower, and testing kind of a previous low made a new low. We actually made a new low, but I figured, we'd probably test it again in the morning, but instead we opened higher. And I just bring this up because I think I had my expectations and they weren't met right away. It took an hour, but that actually played almost better into my hands, because I find that if you sell off, or if it does what you want right away, it usually might expand and stretch it. So we started higher and came back and tested low. I guess I'm just answering your question with kind of an example of, you have to be flexible and you have to be adaptable. But at the end of the day, I had the right trade on. I just had to wait for it for another hour for it to come to that spot. And it just happened to work out again in a perfect manner. So I think you have to get back on the horse. I think you have to journal, do all the things that, everybody knows, keep track of the trades. I think you have to be emotionless. I don't get excited when I win, and I really don't get excited when I lose. I don't bum out.
All right, I'm going to call bullshit on that right now.
Okay.
But you try, I understand that. You try as best you can not to let the emotion get involved with your.
Well, I mean, I'm also very very comfortable having positions against me. And I say this all the time. If you can't be comfortable with watching negative equity while you're in a trade that is still working, this game is not for you. That's the biggest lesson, because the money is made not being perfect at a top or a bottom. The money is made in the meat of a move. Even today, I was buying well above the low of the day with the plan to be buying down to the low, because I didn't know if we'd get to the low, and we didn't quite get there in the SPOOs. We almost got there. We got real close in the NASDAQ. And then, the Russell made kind of a new low. So the leaders, again, made new lows, and again, the NASDAQ made new lows again overnight on this move. And the SPOOs did not intraday. So that tells you a lot. But again, I've got years of time in front of the screen and know the behavior. And I also have my rules in place. I don't like to trade the first hour. I like to see what the market does. I like, and so.
Yeah, I mean, but I think the question is, as you cycle through being hot and being cold.
Yeah.
For me, sometimes being cold is because you have the right system, but it's the wrong market, and you have to understand it. And sometimes being cold is your personal life is maybe in shambles, and you're bringing that destructive situation in your personal life to the trade desk, and you're sabotaging your trade because of what's going on in your personal life. And it's important to understand and have the self-awareness of which of those two things is going on, because you need to address them a little bit differently. If your personal life is driving, sabotaging your trading, you got to figure that shit out and fix your personal life. If you have the right system in the wrong market, maybe you should just go skiing or golfing. And you understand that you're pressing this reversal system in a trending market, or a trending market in a market that's just, reversing back and forth. I don't know. I think those two things are important nuance for you to figure out what's driving that ice cold trading, or that ice cold situation.
No, I think these are valid points that you're making, Bob. And I think I've said this in, videos that I've done over the years. If you're going through a death, your daughter's getting married, a death in the family is happening. You're going through a tough spot in your marriage, and if you can't separate that from the game of trading, then you sure should take some time off and separate yourself, because they're not related, and the market's not out to get you just because you and your partner are not getting along. right? They're not related people. So if that is what you're bringing into the market, to your point, don't bring it in. I mean, and if you're mourning, you're probably not going to be seeing things very clearly, and you should get to a spot. Again, the thing about trading is it is probably the most representative game of what is going on in anybody's life. And that's I say this all the time, but I think it's the hardest thing for people to learn. You have to separate kind of what's going on outside and what you think would happen, because those things don't matter. It's what is happening.
Yeah, the other thing that I think, and super nuance here, super nuance, is much like battling with weight. I think trading and in your personal life becomes your trading, I think also. And there's this homeostasis. There's this place where you're comfortable if you're making a living, and to make jumps to become bigger traders, become a bigger trader, take more risk, leverage more or whatever. Even if you have the money, you're not necessarily even leveraging more. But there's this, I don't know, man, it's really hard. And it doesn't happen a lot where people become these giant traders. People tend to get comfortable with the living they're making trading, right? And there's this homeostasis where they start getting hot, they trade bigger, and somehow that reverts them right back to the size that they're comfortable with. It's a nuance, and it's a hard leap. And not everybody can trade giant, and people get bored if they're trading small. I don't know. I just think that's a nuance of the homeostasis that you're comfortable with, that you will inevitably return to if you're not really working on the process to grow your trade.
Yeah, and I think to address kind of your suggestion is I do think that to me, you got to figure out a plan for whatever level of capital that you're trading with. So if that is, 100,000, then you trade with 100,000. If it's 100 million, then you trade with 100 million. But to me, adding a zero at the end of the trade has never been an issue, because I just think of it in terms of percentages and numbers. I think of it very cleanly that way. So it's never, for me, that's not, I've traded very large and I've traded very small. So they're not a big deal, but you have to play with, again, what is in front of you. And I think that's the most difficult thing for people to do. If you were only a small trader and all of a sudden, like you said, you've run up an account and you're managing, you've gone from 100,000 to 100 million, or excuse me, let's just say you went from 100,000 trading small up to $1 million, which is a 10x, right? And you're still trading. And let's just say, for example, you did that in a short period of time. I would suggest you probably stick to the same small size, because, maybe it was one or two trades that kind of, took you up there. You had some options trades or something like that. I don't know. I'm just making up scenarios for the listener here, but I think you have to trade within the scope of whatever makes you comfortable. And I guess what I was trying to say is, at some point, maybe you're not comfortable trading the $1 million percentages that you were trading for the 100,000.
Exactly. So there has to be some thought on that. Otherwise, you're going to find yourself right back with the same.
And again, so to the question, one of the things I do is I kind of just, and I tend to trade pretty small when I get into positions anyways. And I tend to leg in, which means probably the biggest problem I have as a trader, and the one that is more of a overcoming for me, is missing opportunities. Hence the name Miss Trade. That's how I came up with it, because I think that one of the biggest problems traders have is there are opportunities every day that you're going to miss, and you're going to pound the shit out of yourself. And if you can't learn to not do that, it's going to become it will become a problem, because you start, second guessing yourself. Why didn't I take that? And so I just try to take the trades, and when I don't take them and I miss them, I guess what I've realized over time is the ones I miss, my percentages are the same. I'm going to lose on 30-40% of them, and I'm going to win on 60-70% of them. And I chalk it up to it goes both ways. The trades I'm in and the trades I'm not in, both can pay me or not pay me, and you just have to be good with it. Really, the hardest thing again is being comfortable in your discomfort.
Yeah.
And that discomfort can come from, making too much money. That discomfort can come from losing too much money. It can come from not having a strategy and not really knowing what you're doing today. That's probably the most, common one that I see is people just, they think, or they have one strategy, which I think is okay to have one strategy. You have to start somewhere, but over time, you're gonna go through markets that are different. And again, we've been talking about transitioning markets a lot lately. And when they transition, you better have a strategy for, long momentum to short momentum if the market is changing.
And just like that, we started, SPOOs were trading 32 at 07.
Yeah. Yeah, they were trading 40. Now this market is so thin. And
all right, man, let's move on because we could spend the whole time talking about the nuance of getting out of the cold slump.
Yep.
I just want to touch on a couple other things quickly. And this one goes out to our GameStop heroes and the bras that thought they were going to take down Melvin Capital. And I like this one because of nuance, right? And we live in the age of irony. Maybe we always have. Melvin Capital gained 22% in February after GameStop rout. And then I love the first response. In real capitalism, they would have gotten stopped out, but let's pretend that the stock market is still capitalism. And the guy's right. Like if it was Duke and Duke, they'd have been like, Mr. Duke, all margins need to be met at the close of trading. And what did he say, Matt? Fuck Mortimer. Get those people back in those pits. Turn those machines back on. We need to trade out of this. So,
yeah. And again, this is complicated because, we've seen these numbers supposedly down 50+% in January, up 22%. Now, what we don't know is how much extra capitalization went in, and did that 22% actually cover the 50% that they lost? And this is hard for people to understand. If they put in billions of dollars on top of the billions that are in there and they made 22% more, like, I don't buy into the fact that they're actually still, down 25%, right?
Yeah, I agree with that 100%.
Okay.
All right, man, we're going to move on one more time. Let's talk about some real price action here. Let's get into the batter's box and talk about batting averages and things like that, like real statistics, because this one today, Jim Cramer, cheap stocks, Google, Facebook, Apple. It's a tweet out there. It's obviously, when you say cheap stocks, it is a buy recommendation. Don't tell me that it's not. You don't say something's cheap and then say sell it, right?
Right.
You say something's cheap because you think you should buy it. Let me start with Apple because for me, I would, I used to say, Matt, I need to be able to host. I used to say that yesterday and the day before, and I actually said it the day before that too. Orange Man Bad.
This is the first time you have not been a co-host since last week, so that's pretty good for me. 3 out of 4, 75%.
All right, what is going on here with this chart?
You're looking at some.
All right, let's talk Apple here, and this is the quarterly. This is the quarter. We talk quarter. The quarter ends at the end of the month, right?
Right.
Quarterly. And it still looks okay. If this was an hourly chart, it's fully a momentum. Like, yeah, it's looking good. It is on the moon compared to where it was. And wait a second. This is the SPOOs. Come on. I knew something was wrong here. All right, there we go. Quarterly Apple. 3-minute Apple. 3-month Apple. God, I'm disheveled today. Holy shit. All right. Quarterly, again, like everything else, on the moon, but putting in a red quarter, which is not as healthy, right, Matt, as a green quarter, in my opinion. I could be wrong, Jim. And let's come into the monthly. We got a whole lot of month left here, but solid second month in a row out of that momentum level now, right? Starting to head a little bit south. And then if we look at the weekly, let's continue the story, Dr. Davio, solidly in low momentum on the weekly. And let's just come into the daily and round out our trifecta. And again, the daily also low momentum. I mean, it seems from where we are, and where we came from, and being a commodity trader at heart and understanding that, corn can go to $9, $10, and then it can go to $2. right? And then oil can go to $140, and then it can go to negative $40. Although we didn't know that, right? And so these are cheap compared to what? Because they're not cheap compared to their history of the symbol. That's basically what I want to say. Jim, I want to say I don't. I'm on the don't here, and let me see what you think about Apple.
Well, first of all, you got to understand one thing about Jim Cramer, and he was very successful when he was running his hedge fund. And I would say Jim is a great short-term trader and a horrible long-term trader, unless he just literally, believes in the story and wants to hold it long-term. Then I bet you he's okay. But I guess my point is, I do believe that he's always, you have to look at Jim from a point of momentum. And he's horrible at the short-term turns. He's horrible, has been forever. And that's why he's blocked me, because I've called him out on this.
You are blocked. You are blocked.
I was blocked.
I'll be blocked tomorrow.
Oh, I was blocked. When Cramerica first came on, and whatever, 2008, 9, when he was ringing the bells and playing circus boy, monkey boy out there, I would call the task, but I got tired. It's like, who cares?
I agree. I wanted for a spring point, because these,
But I think the point you're making is, if you're watching somebody, you're reading a newsletter, do your own homework. And
exactly.
Regardless of what Bob thinks or what Matt thinks or what Jim Cramer thinks, who gives a shit? Like, honestly, you should turn it off. I mean, you'd feel better about yourself and your process if you just turned it off. Unless you want to fade Cramer, then you turn him on, because whatever he says, you can pretty much fade it typically. Because, and this is, matter of fact, I marked this in my chart, 128.87. When you told me last week he was telling people to buy it, I'm like, oh, you can sell that. You can mark my words, that's a sell. But let me just look at the chart, right? Forget about my nuance of talking about Jim Cramer's history.
Exactly, and that's the key here, because he's going to be right or wrong, and I'm going to be right or wrong, but I'm going to live or die by my opinion of the market based on my reading of the chart.
I mean, here's what I see, Bob. This is a 3-month chart. We're looking at the last 3 months, going back to early December. You could tell me this is Beanie Babies. You can tell me this is Pet Rocks, Bitcoin, Apple. I'm a seller of any rallies into this thing. And this is why. Look at this meat. You've got all this action, 125 to 139, 138, this whole dark area. Those people are trapped. And that's for the last 3 months. That's a long period of time. If we fractal out, to your point, I'm going to play the fractal game, and I'll do it by time. This is a 6-month chart, Bob. Low of 103, high that we saw here, right about 145. We're coming back into, strong hands are down here at 115 for the last 6 months. That, to me, right now, I just fractaled from 3 to 6 months. This is where we're going. We're heading right here. It might not be immediately, but it's going to happen. We will trade, mark my words, probably shortly, sometime in the next month or two, we'll trade to 115. If you look you look 1 year out, we'll fractal out even further. Oh, okay. If that doesn't hold there at 115, which is the top of the value now for the year period, if that does not hold, and again, we're playing this game, time expands and contracts, exactly.
You have to be playing the if-then. This is the if-then game all day long, every day.
But this is important. The time frame matters. The longer time frames are more powerful always, but the short-term ones are typically in control. But when we change, the longer-term ones become in control. So the no longer is BTFD in control, which is buy every fucking dip, right? We're done with that. And at least for now. And you've rolled, again, we rolled over. You see the change in color on this indicator that I use. It's a custom indicator. This is a daily chart. This is significant. Now, it's only suggesting 115 first. If that doesn't hold, then you come into these holes, Bob. This is a big hole. This is a big, big hole. If that doesn't hold, this is going to trade back to 79. Again, I'm not saying that. It's all contingent upon 115. So 115 has to hold. So that's how I see it. And that's how I would look at this market. And I would say, okay, any rallies I get up to 135, I'm a seller. All right. And so if you came in with no position, I'm telling you $5 maybe to the downside. And so therefore I'd probably wait for a bounce to sell.
Right on.
If I'm going
right
to,
on.
if I have no position, right? And this is always, if Kramer would talk this way, if I had a position, I wouldn't buy, sell, or hold. I would do nothing. I'd wait, right? And if I did have a position, I would continue to ride it short, because it's a short position is what I would have on this. And I would not look to really be long, except at 115 with maybe $1 or $2 hard stop. I mean, for me, that's it.
Well, and the other, he tweeted the other day about it's not, these things can't just go down every day. We talked about this yesterday until they get it, they start to uncover these lower profile areas. It's just it's a disservice to traders to say something like that. Of course it can trade lower every day because it traded higher every day. And when I look at the market, a year of COVID and the moonshot that we've taken, look me in the eye and tell me there isn't some sort of disconnect with reality about where we are on these valuations and where the market is. It would have seemed that we would have solved all the world's problems, in my mind, to have these valuations. Like everything is perfect and it will be continuing to be perfect. Thank you for playing. Wear your mask and everybody's fine. Everything's fine.
So when we broke out of this triangle, Jim Kramer, we went all the way up from, 400 to 900. You can't keep going up every day. Well, we did. We did for those 2.5 months from election day to here. Okay, now that move is over, that money's been put to work based on, the Biden win. Okay, now what's left? What's left? Well, what's left is bad policies that are coming to fruition. And now the market's got to deal with the new realities of, you don't have Trump in your corner. You got a new guy who's walking around like a zombie, and policies are being written that you can't even keep up with, but the market is scared. I mean, the market.
Yeah, let me ask you this, just as a nuance on that thought line. If I'm spending $15 extra a week on gas, right? Am I upgrading my phone?
Yeah, or yeah. Can I get a new phone? Can I get the new Apple TV, the iWatch, the products I don't really need anyways? Or do I need more jam down my throat? No. And are you? Yeah. I mean, it's a great point, Bob. It's a great point.
All right, man. Let's jump and then we'll jump back. I want to talk a little crypto because we do that every day. We talk crypto every day. It's the new frontier, supposedly. Hold on, Robert. Then let's do it. Yeah. Production. Let's go. Matt, when we talk about crypto, a lot of times sometimes I talk about the one that I got. A lot of times I talk about the one that's on my radar, and then I miss it. And that's happened to me plenty. And this one I've talked about before, and it's the Hedera hash graph. And this was the news, and it jumped, I don't know, it jumped from like 12 cents to 19 cents. It's off from there a little bit. Top 5 global utility EDF joins Hedera Governing Council. It's a French company, Électricité de France, I believe, SA.
Hey, Bob, fantastic Nouvelle Francaise.
Is that it?
Nouvelle Francaise. That's how us bad Americans used to call our French.
But here's my point, and I said this forever. There's plenty of things that need disruption, and there might be technologies that could disrupt it. The only thing that matters is if enough people say, you know what, I agree, and they adopt the technology, whatever it is. For instance, if people said, you know what, I really prefer my relationship with my horse and the carriage, and I don't care that the car can get me there faster. I like Flickr, and I'm not going to put Flickr out of a business. Cars don't take off if everybody just was so enthralled with their horse and buggy. That's maybe a terrible analogy, but my point is things have to get adopted. All right. And so I wanted to bring this up because the article goes on to explain this use case. Hedera Token Service is one innovation we look forward to leveraging to deploy a carbon offset and credit system on Hedera, on this blockchain. in line with our overarching mission, yada, 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 yada. Again, though, I don't know about you, but I know people have been talking about a carbon offset system in chasing carbon and the carbon in the atmosphere. Whatever your views are on it, it doesn't really matter. People are looking to adopt this across the globe. So if a Hedera ends up being the one that they adopt to track and trade carbon offsets, that's a giant, giant, giant use case. And again, it's on my radar. I was waiting for a dip of this thing down to the 6-cent level, and it just didn't give it to me. And now we've had this ram job on this news. I believe that's what the news came from. Oh my God. Still, it's a moonshot. Well, it's back to 16. Let me share the chart and
yeah. Let me take a look at it before you share it, because I'm ready.
Right on.
This actually gave on an hourly chart gave a great pullback just in late February, Bob, to the 9-cent level.
Exactly. I was working for that 6-cent level, and
yeah,
again, part of my problem is I just think Bitcoin's going to have a major pullback, and I don't see how these other alts hold in there.
Well, but it did have a major pull. It did have a major pullback, and it went from 16 to 9. It got cut in half. So to me, this first level, again, very safe to buy from. Basically anywhere.
You're rubbing it in now, Matt. You're rubbing.
No, but
I agree with you. And I was looking at it there and saying it's never getting back to 6 cents here.
Here's the thing. I think we're going to come back to. We're going to talk about style drift, because I think what happens to people is they look at a daily chart and then they don't trade a daily, or they look at a 5-minute chart and then they trade a daily. And I think that may have been what happened to you here. And I think this is where fractaling in and out is great. The big picture matters, but you need to know which time fractal you're trading most importantly. Okay.
Yeah. Do you agree?
And then the bigger time frame is behind it. And until this level fails, Bob, which, again, for me, a failure would have, really, maybe I would have given it to below 8.5 cents. So you're risking a penny, which is, let's call it 10%, a little bit more, 11, 12% on the trade. So you know what the risk is, and then you define the size based on that. And listen, you could have bought it, made some quick money, went up almost 50%. It came back again, gave you a couple, anywhere in here, down to here. It still held that line again. And then boom, how many times do you go back to the well, though? That's the question.
Right. Exactly.
And how, and what time frame? For me, I mean, gosh, if you're making 40, 50% on a trade, I would have probably exited, bought some more, and probably bought the same amount, because I know that even if it goes to my stop, I'm going to have a net profit. Like, that's the great thing about it. Like, to me, you can lever a trade by taking off, putting back on, and never having to size up. So that's a great way for people to realize that markets don't go straight up and take profits and buy the dip, because it makes it a lot easier to scale a position that's not going against you. Rather, you're in the money and you're just buying over and over again until something changes. And nothing had changed on this one. So I'm not saying this just to rub it in. I'm just saying.
Matt, you can't, come on, you can't rub it in. You can't. Just to point out that in the crypto sphere, if you're not familiar, you need to find out where price discovery happens for lots of these coins, because they're not all traded on every one of these crypto exchanges. The Hedera Hashgraph HBAR US dollars traded at OKCoin. Please use our link to open an account there and to start trading some HBAR and or just start investing in it. Because again, I look at this space, and if I don't see a story where somebody has actually used the protocol, I got no interest in it. It's got to show some adoption. And HBAR was on the radar earlier in the year or late last year with regards to tracking the coronavirus vaccines out of the UK. So people are using it. It's got a use case that is being done. Let me show you this on the chart on the weekly, because for me, this is this is one of those developing stories. This is the weekly. I caught that first pump to the 10, 11 cent area, and I was waiting for a pullback. that just never got back far enough for me. I'm of the opinion now, though, every pullback in this thing needs to get bought. And so that's what I'm looking at. This chart looks to me like it could go full al fuego parabolic. It's just a great setup. And again, the stories will be driven by adoption. That's what I got to say about him, Matt.
Well, I like it. I mean, again, but I'll just point out a couple things. You talked about a longer term chart, and yet you're not trading that longer term chart. So I'm just, again, I'm pointing it out. Look at the longer term chart, but which one are you trading? Are you trading the nearer term chart or the longer term chart?
Well, again, like in crypto,
and if it is the longer term chart, you missed it. It didn't happen.
Right.
Fine. And if you're trading the shorter term chart, you need to fractal in a little bit.
Well, here's the point, though. With this new move, it moves those levels even on the longer term chart up.
Sure.
So where
but which are you trading? Are you trading the longer?
I'm trying to catch a retracement on the longer term chart to a point of control. Doesn't the point of control move higher as it moves higher?
But the longer term chart, you're not going to see as many moves to the points.
I agree with that too. And this is part of the nuance with crypto is sometimes it's not that you're a hodler forever, but sometimes the buy and hold, I don't know. It's a nuance for me. I don't want to watch it every day, so therefore I don't want to really be beholden to the shorter term chart. And I also know that I'm going to miss some things then. My point is, I'm going back to this point though. As it's exposed higher price potential, that pulls the point of control and an area where it's reasonable for you to get in higher. It's not at 6 cents anymore, that longer term point of control. So, and I don't know what it is right now, but that's the nuance of it. All right, Matt, what else? Gold, let's talk gold.
Nothing new, sitting at the same prices. We're done.
Gold is done. And do you see a retest of that much lower level? Like we talked yesterday. Well, we still haven't seen the meltdown.
I'm calling for 1500s. We will be in the 1500s. We're back at the new lows here. We're trading. Where are we? We're right at 1700 basically again. So yeah, it's not looking good. The bonds are getting schmeezed again. So good thing. Our buddy, we were going to have Triplex Mike on, and he's a bond trader. He made a good move. It was quiet this morning. He's like, I think we're going to be busy. So the sellers are in control of that market. Let's talk a little bit about the bonds.
Yeah, because, bigger picture here, Matt, is, and it goes right along with the Apple story, right? Higher gas prices, higher credit card debt interest rates. All of these things are going to impact eventually. Higher food costs. We talked about the hogs yesterday. All of these things affect that willingness to purchase another subscription to another streaming service, especially coming into the summer, right? Spring and summer, and another phone that you don't need and that you hate.
Bonds roll over a little earlier. They rolled over, we're already trading the June month, and we're not quite to the lows here. I wanted to point this out. The H is still trading, but most professionals have rolled over, Bob, to the M contract that happened a week ago. So those roll over a week ahead of time. So I'm just pointing that out. The bonds are leading us here, but remember, we had this spike here that took us down to about 156. I've been calling for 155s for quite some time. Again, the longer term chart has been in control here. So which time frame is in control, and then kind of trade to that. When you look at, and I'm going to bring in just the continuous contract because I'm having slow issues here. We're almost there. We're at 157. And again, to me, we're getting down into the hole here, somewhere around 155. Should hold. If that doesn't, we're going to 145. So again, this market is quite changed. We're at the key pivot here. Fibonacci levels, again, from the most recent low back in September of 18 up to the most recent high, March of 2020. And we're at the 61.8. Again, I don't think that matters so much. I'm not a hard Fibonacci trader, but this 155 low definitely needs to hold. Otherwise, this thing could, push pretty quickly down into here, especially if we get below this level, 153. So 155 to 153 should hold on the bonds. very oversold, but not as much as the last time. So again, waning momentum is happening here. We're definitely due for an oversold bounce. So I would not be, again, if you have not been short from any time back in here, this is not necessarily to start a position, unless you know that it can snap back fast, and you better flip the other side and take the long side trade, because this thing could trade very quickly up to 165, 170 also. So especially after a move its head. So this is not for the uninitiated. And if if you're just getting into trading, I don't recommend trading volatile things right away until you understand how to manipulate and work in those conditions, right? When things are moving very fast, you better be able to react quickly.
All right, Matt, I think we got a wrap.
We got a wrap?
Unless there's anything else that's jumping out at you that you want to.
Well, here's what I have to say, Bob. It's 9:50. We're middle of lunch, and they're crushing this market right now. I would be wary. I'd be careful buying dips here. We're testing the lows again across the boards. The S&Ps did make a new low this morning. They did not test the overnight, but now they're running towards that 37.77. If that fails, we talked about this in the group this morning, 37.20 is your next level. If that fails, you're going down to 3,600. These are the stair steps, how markets should hold at certain levels. And we're getting dangerous. We're getting into dangerous zone when it comes to most of these markets right here. So be careful when you see a sell-off or a big rise in the middle of the day. And you and I have been doing the show here the last 40 minutes. I haven't really followed the news. It's pretty much sold off while we've been in here. Something's up. I don't know what hit the market. I don't know if more bombs are flowing in Iran, Iraq. I don't know what's going on.
You know what, too? I said this yesterday. Like as the news cycle churned over the last 6 months, 5 months, whatever, as things got bad and the news got worse, the market did better. And so, like, I fully expect a good unemployment number tomorrow, right? Sure. And the market will rally, and then they'll step on it. Like, it seems to me, in my logic equation, that's how this market is going to evolve here. You're going to get better news, and we are going to come out of this thing. There is light at the end of the tunnel. The grass is greener on the other side, but they've priced everything in.
But I'm gonna take the other side here for a moment. If you're looking for a reason to take down the markets, and we've been overbought for so long, and still, at 3,800, we're only down 150 points. We're not, that's 4% from the all-time high in the SPOOs. Oil today, another breakout. 65.06 was the new high. Again, this thing had a chance to roll over here at below 60. It looked like it was maybe going to rallied here. That would have been a good sell area. Again, not involved. Thankfully, I would have been squeezed right out as we went to a new high there. But again,
and that's driving the story. It's a complicated model.
But does this, to me, something is happening? Something is.
I see. The oil is more geopolitical. Something else is going on.
Correct. That's the point. And right. So that coupled with the fact that the SPOOs are selling off at the day's lows for the third time actually. Third mouse gets the cheese. Maybe we break here, and then we find out, oh, that's why everything was selling off, because a big bomb is going to be dropped or whatever. And again, you'll look back at this and go, oh, Matt and Bob were talking about oil was spiking, SPOOs were getting hit, everybody was, wary. These nuances, like, you don't sell when they announce, once that it's announced, it'll flush, and that'll usually be the move, right? But the smart money is already moving. It's moving fast right now. And that's a big warning sign, especially in the middle of the day. When you move like this, I just want to say, be wary. Don't buy the fucking dip today.
Right on. Hey, Matt, you know what's cheap?
What's that?
Opinions. Opinions are cheap. Thank you, Jim Cramer, for making that abundantly clear. Lee, please retweet and share the podcast far and wide, like a Chicago electorate. Vote early, vote often, and get your dead relatives to vote. God damn it. Matt, thank you so much. MarketVitals.io markets. We talk, please share it. Matt, another great segment. I appreciate you and your input. And join us at MarketVitals.io. Join the community. Hey, by the way, Matt,
yeah.
Let me just say that I I do it when we do it. I want to welcome Matt and Jason, overnight joiners of the network, marketvitals.io.
Welcome.
All right, pal. You're the greatest
No, Muhammad Ali was the greatest
of all time.
I'm a mere mortal.
Right on.
All right.
All right, pal.